Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay in the Delhi studio. Surabhi, it was a choppy day in the markets. The major indices didn't go anywhere, but so much of volatility and activity in the mid-cap space. It just continued with yesterday's surge, and of course records fell by the wayside. The mid-cap index set new highs for itself.
Absolutely. I guess the rest of the market is looking for more cues, more direction, big events like the policy behind us. So right now, looking for more triggers. Let's get to the headlines this evening. Markets end a choppy day of trade on a flat note, but mid-caps continue their outperformance. The mid-cap index surges 1.5%. Names like Suzlon, FirstSource and Sun TV registered double-digit gains.
Stocks insurance plays like Reliance Capital and Max India surged on hopes of the insurance bill getting passed in the current winter session of Parliament. The government is believed to have got Congress on board, and the select committee is expected to submit its report next week.
The government's divestment drive is all set to kick off with the sale offer for sale. The offer for sale is scheduled to be on Friday. CNBC TV 18 learns that ONGC's divestment, however, is unlikely to take place this month as investors are demanding a heavy discount due to lack of clarity on subsidy sharing.
All right, those were the headlines, and here are the experts that we have lined up on the show for you tonight. The big bull, Rakesh Jhunjhunwala, tells us how he is reading the Indian markets. That's from the CNBC TV 18 Investor Summit. We'll also get to Vineet Bhatnagar with his take on the markets, especially from the F&O space. And as always, Sudarshan Sukhani will join in to talk about the technicals. We'll, of course, get you some important global opinion from Jeff Lewis.
All right, before we get to all that opinion, let's move to the day's trading action. A range-bound session on Dalal Street, and after 6.5 hours, we ended almost exactly where we started off. The mid-cap space, however, was really surging, and stocks are flying high, with the index almost cracking a double century to end at record highs. Anuj Singhal is here as always with the wrap of the day's action. Anuj, a quiet day for the headline indices.
Well, here's a word I don't use too often to describe market. Stunning, really. And don't go by the Sensex and Nifty for that. Really, you have to look at the mid-cap index, the market breadth, and really individual stock moves in today's trade. That was telling you the true story. 9 out of top 10 traded stocks actually ended in the green. For starters, let's talk about a couple of large caps, because there were some stocks that moved there as well. Stocks like Jindal Steel and ONGC both were up quite a bit. Jindal Steel up 8% in particular. And apart from that, on the losing side, you had stocks like HDFC, Bharti Airtel and Dr. Reddy's. But this really was more for formality. Take a look at the big stunning stocks today, mid-caps, and the kind of move that you had in individual stocks today. SR Oil was up 20%, Sun TV was up 12%, and what that won't tell you about MRF being up 9% is that it was up 3,000 rupees in a single trading session. Apart from that, you had some other big movers, but here you wonder a bit about the quality of stocks. You had Suzlon, MTNL, HFCL, all rallying between 7 to 10% in trade. Some other prominent winners included stocks like City Cable, Financial Tech, Texmaco. Look at the percentage gains in some of these names. Really big moves. And on the losing side, you had some stocks like Seat, a sale that was down ahead of OFS, and Pratibha Industries that was down 6%. So really the jury is out on what you're seeing right now for the market phase. Is this a bit of value buying that's taking place in the mid caps, or is this froth building up? That's something that we'll come to know over the next few days.
That's excellently put, Anuj. You have to distinguish the mid caps between areas of froth and areas of value discovery. But today the markets looked at a whole host of micro reasons and a whole host of micro stocks. Anuj mentioned some of them. TVS Motors continued its rally, partly because of a Goldman Sachs upgrade, and so did Eicher, where the target price has been raised by Goldman all the way to 19,000 and something. So that's a tall ask. The insurance place we spoke about, Reliance Capital and the likes, municipal and government organizations have to use more LED lamps, and that took Havells and the likes of Surya Roshni up into stratosphere. So there were all kinds of reasons, and the old reasons continued. The wholesale money getting cheaper because of off, the debt market falls, and Yes Bank and a lot of NBFC companies continued their rally. So for several micro reasons, you saw a whole host of stocks pulling the mid-cap index up by 1.5%. Well, that was the story as far as the mid-caps were concerned. And now let's get you some important opinion from big investors. Speaking at the CNBC TV18 Investor Summit yesterday, Big Bull Rakesh Jhunjhunwala, actually the eternal bull, made a blockbuster bet on the indices. He expects the Nifty to hit, hold your breath, 1,25,000 by 2030, of course, 15 years on. Speaking to CNBC TV18's Shireen Bhan, he said that he saw no reason why the Nifty should not grow 10 to 12 times in the next 10 to 15 years. Let's listen to a slice of the conversation.
Nifty has progressed 10 times in the last 15 years, right? And if the outlook for India, which I think is certainly much better in the 10 years to come than the growth that we had in the last 10, with increasing investor participation, don't you think the next 10 years in India should not be 10 but 15 times Nifty? If by sheer earnings, whatever earnings growth we had in the last 15, I personally believe that the growth that we have had in the value of the Nifty in the last 10 years, it will be far exceeded in the next 10.
Far exceeded in the next year?
In the next 10 years.
In the next 10 years.
You said in the last 10 years, 15 years, the Nifty has grown 10 times.
Yeah.
I see no reason why the Nifty should not grow 10 to 12 times in the next 10 years.
I'm going to request you to try and at least give us one short-term headline. You've given us many long-term
I can give
headlines.
a target for 15 years.
Okay, give us a target for 15
For the Nifty,
yeah?
Or the Sensex.
Both, if you
I'll
like.
give the target, then I'll tell you the index. See, I will be disappointed if in 2030, it's less than 1,25,000.
The Sensex.
The Nifty, madam.
So that's
and I'll give you a basic reasoning. If the earnings grow at 18%, in 15 years, the earnings will go 15 times. If there is no expansion in PE, the Nifty should be 1,25,000.
You're clearly very bearish on crude. How much lower do you see crude prices?
No, I'm not bearish.
You are bearish.
See, the whole tragedy is why I'm so sure the oil prices will this time not go up, because every time I used to short crude, I used to lose money. So this time, I'm not as smart as people think. This time when it broke 100, I said, no, I'll never short. And see what happens. But if I were to judge whatever knowledge I have, I think you can look for a crude price. I would plan my budget at $75 Indian basket.
75.
That is 70, between 70 and 80 international basket. So Indian basket could be 70, 75.
Through the day, through the week, through the weekend, you will be able to hear more of that very interesting, engaging, absorbing conversation that Shireen had with Rakesh Jhunjhunwala. But now, back to the here and the now and the today. All the futures and options action. Let's go to Nigel D'Souza for a wrap. Nigel.
Well, in the derivatives market, writing of options seems to be beneficial rather than buying any options. It seems like the Nifty is in a bit of a range, and today the Nifty ended as flat as can be. So if you were writing calls and puts, you would make some money. Take a look at the 8,600 call as well as the 8,700 call. The premium on both those two strikes were down between 4 to around 6 rupees, while the 8,500 put as well as the 8,200 put, both of them were being written. And the 8,500 put, in fact, we saw the premium move from around 62 rupees to around 56 rupees, indicating that, in fact, in the near term at least, the 8,450 odd level should act as some kind of support for the Nifty. Take a look at individual stocks, though, that did see big buying. We did see GSPL, that stock, in fact, did see big buying in today's trade itself. The stock was high by close to around 7%. Second day running, the stock is one of the big gainers. While SAIL, on the other hand, did see selling pressure, particularly in the last hour of trade. So that stock was getting sold into. HDIL as well, for the second day running, that stock was getting sold into. While we did see some unwinding on UCO Bank after the big run we have seen on all those banking stocks, unwinding of longs was seen on that counter. And the new entrants into the F&O market, all of them were seeing big buying. So the likes of Vocart, EIL, as well as Eicher Motors, all of them saw big buying in today's session.
All right, Nigel, thank you so much for that. So quiet day. Let's move on to some stock-specific action now. And as Lata was mentioning earlier, Eicher Motors and TVS Motors gained in trade, and they were up nearly 5 to 6% on the back of news coming in that Goldman Sachs has upgraded their ratings to a buy. Sonia is here to tell us more. Sonia?
Hi, thanks for that. Well, Goldman Sachs has resumed coverage on both the stocks, TVS Motor and Eicher Motors. On TVS Motor, they have added it to their conviction list. They have a 12-month target price of 345, which implies a 40% upside to the current market price. They say that TVS will benefit significantly from the shift to scooters trend that we have been seeing, and the scooters market will grow at a pace of 24% CAGR over the next 3 years. On Eicher Motors, they have resumed their coverage. They have a 12-month target price of 19,235, and they say that so far there was a big waiting period on Royal Enfield bikes, which Eicher Motors could not service on account of low production. But now they've gone ahead and ramped up their production and can fulfill this waiting period. On account of that, they're expecting the revenues to grow quite a bit, and they also say that there is limited competition from the likes of Harley Davidson and Triumph. So both these stocks have been higher today.
Thanks a lot for that, Sonia. Well, the biggie Hindalco is on a huge debt restructuring drive. Our correspondent Kritika learns that over the next 1 year, Hindalco is going to restructure its 63,000 crore rupee debt over 3 phases. Kritika is here with us to break up this debt revamp. Tell us, Kritika.
As you said, 63,000 crore rupees, too fat. The company is actively looking at bringing this down. How will they do this? It's spread across 3 tranches. In the first tranche, they're looking at refinancing their debt. So they're looking at refinancing around 6,000 crore rupees by converting rupee loans into dollar loans. So essentially, that will lead to an interest cost saving of around 150 crore rupees per annum, according to my sources. In the second tranche, they're actually looking at an ECB issue of around $500 million. So that's about 3,000 crore rupees. Now, for both of these tranches to get completed, July 2015 is the timeline that they're looking at. And my sources say that post that, they are exploring other options as well to actively bring down debt. So all the basic areas that they look at, including QIP, bond issue, all other regular suspects, but they haven't narrowed down. These 2 tranches have been confirmed, and July 2015, according to my sources, is the timeline that they're looking at.
All right, Kritika, thanks so much for that. Let's move on to all the action that's coming in from the primary markets now. And it seems Monte Carlo, the apparel maker, is a new kid on the block. Varinder Bansal is now joining in. And Varinder, we know the famous tagline, it's the way you make me feel. Is Monte Carlo going to make the markets any nice?
Well, I suspect that, clearly, but a detail about the issue which opens today, closes on December 5, issue size 54.3 lakh shares, price band 630 to 645, promoters and private equity, Samara Capital are looking to exit, so it's an OFS where none of the money will be coming to the company, but will come to the promoter and the private equity. Well, they are looking to raise anywhere between 340 to 350 crores. At 645 rupees per share, the market cap will be around 1400 crores. Now, let me give you the good points of the company. First, as you said, it's a strong brand recall, especially in the woolen segment. They have nearly 196 Monte Carlo exclusive brand outlets and nearly 1,300 multi-brand outlets, so strong reach. The company has been growing consistently anywhere between 15 to 20% CAGR of the last 3-4 years. EBITDA margins around 18%. Of course, they've come down a bit, but even 18% is good enough for the company, especially in this segment. Now, the bad points, which are important. First of all, the company is coming up huge with steep valuations compared with peers. At 645 rupees per share, it's around 25 times compared to peer groups like Arvind and many other small kids who are trading anywhere between 15 to 20 times. Arvind is trading around 20 times, and other like Cable Kiran and Kitex Garments and others are around 15 times. So steep valuation. Second, of course, is that nearly 50% of the revenues come from traded goods, which is not good for a manufacturing company. And there's a steep upside of nearly 40-50% margins what they achieve on this traded goods, which is also not good. It's a single brand, so they don't have multiple brands like Arvind. Of course, promoters' track record, if you look out for some of the companies like Nahar Spinning, Nahar Capital, they haven't made any wealth to investors in the last 10-15 years. But the only good thing was in today's trade that the group companies like Nahar Spinning, Nahar Capital, they were buzzing, they were up 10-15%. But look out for the IPO. It ends on Friday, so we'll update you continuously.
All right, thanks for that, Varinder. In a mood where Snowman and other IPOs did so well, perhaps this could find buyers and could even list very well, given the mid-cap mania that's underway at this point in time. But on that note, let's give you some more expert opinion. It's not just domestic investors, but global investors also, who seem to be very upbeat on Indian stocks. In fact, Jeff Lewis of JP Morgan AMC, whom we spoke with earlier today, maintains that India continues to be one of the top bets for FIIs in 2015 as well.
We would be overweight Europe and Japan, broadly neutral on emerging markets, because although they're improving slowly, we don't really see strong drivers. Within emerging markets, we would be underweight the commodity producers, Latin America, Middle East, and overweight Asian manufacturers. That would include both China, India, and Korea, Taiwan. I don't think there's any danger of India suddenly being starved of foreign investor inflows. India also has a very stable long-run story which investors understand, and so I expect India to continue to see good foreign inflows on both the equity and the debt side.
Well, on that positive note, let's go into a break. But coming up, a chat on the technicals of the market with Sudarshan, and we'll also get you a lot of trading ideas.